Hi, I'm Pattu from FreeFinCal, and let's look at Franklin India Smaller Companies Fund in this review. This is one of the rare small cap funds that performs well and also has low volatility within the category. Now, this fund has an interesting history. It was launched as a 5-year closed-ended fund in January 2006, and after that, it became open-ended. From April 2011 on, so the AMC decided to make it open-ended. From June 4th, 2018, what was earlier a mid and small cap fund became a small cap fund in line with SEBI regulations. So, from inception to June 4th, 2018, it was operating as a mid and small cap fund. It could have any proportion of mid and small cap stocks. Predominantly, but then it became and has now become a small cap, officially a small cap fund. It was kind of a small capish fund earlier. Now, this because of the performance in the recent years, its AUM has quickly increased to 6,800 plus crores. It is the second biggest small cap fund behind the Reliance small cap in the current small cap category. Many funds in the small cap category are essentially mid and small capish fund. They have been changed to small cap fund, just like Franklin. Smaller companies. Last week we looked at SBI small cap. That was also a mid and small cap fund and converted to a small cap fund. It has over the last 3-year period, it has the second lowest volatility behind the Axis small cap. I had written about Axis small cap in the or discussed this in the video on the best and worst performing funds. Axis small cap has done quite well in the last year, but it's still a young fund, so can't say much about it. For Franklin, the low volatility has been because of its increase in exposure to mid-cap stocks. It currently holds 36% of mid-cap stocks. That's a little much for a small-cap fund, but it does that probably because of the fall in the small caps. The AMC feels is not a normal situation as they define in their scheme document. So the fund fell 10% less than than its current benchmark, which is Nifty Small Cap 250. You know that small caps has fallen significantly. The index has fallen like 23-24%. This fund has fallen less by 10%. That's quite significant because of its mid-cap allocation, I think. So if you look at the performance from inception, this is what it looks like. This is with respect to its earlier benchmark, Nifty Mid-Cap 100. So the blue line is the fund, and it looks pretty unremarkable. But that is because when it was a closed-ended fund, this is how it performed. In the closed-ended mode, the performance was rather well. If you look at it, it looks bad because it's always been below the benchmark. But if you consider the situation in which it started, it was during a nice big bull run there. Look at how strongly the market went up in the index, and then it fell down. So because of that, probably the fund took a conservative stance, and therefore it's quite possible that the underperformance is because of its conservative stance. But whatever the reasons, the moment it was relaunched as a open-ended fund, that's how its performance is, and it has done quite well since it has started in the open-ended mode. There's no issue. So now the index's benchmark has been changed from Nifty Mid-Cap 100 to Nifty Small Cap 250. So what we shall do is, as usual, look at the rolling returns and the rolling risk over 5 years and 3 years for this fund, along with benchmarks and several other funds. You will have to pause the video to have a look at it. So by rolling returns, I mean that I calculate every possible 5-year period in this graph from February 2019 to when it started, that as an open-ended fund, that is like January or April 2011. So in that period, I look at 767 5-year data points in each of those colored lines. So in the top graph is the rolling returns. The red curve is the Franklin Smaller Companies Fund. The pink curve is the SBI Small Cap Fund, which we considered last time. The green line is the Aditya Birla Small Cap Fund. The white line, which is barely visible, it's kind of somewhere here at the HDFC Small Cap. Then come the indices. The Nifty Mid Cap 100 is the blue line right at the bottom. The Nifty Small Cap 250, which is the benchmark, is the brown line here, somewhere here. Then there's a grayish line, Nifty Mid Small Cap 400, which is a combination of mid and small cap stocks. That's kind of the bunch together. All the indices are kind of together, not much difference, but then the funds are not. And in the bottom you have the rolling risk, or what is known as the standard deviation. So between any given 3-year window in the above graph, we calculate the monthly returns and find out the standard deviation of the monthly returns. That is, we find out how much each individual monthly return deviates from the average monthly return in that period, and that's a measure of risk. And in the bottom graph, lower the line falls, the lower the risk. And you can notice that among all the funds, Franklin Smaller Companies has the lowest volatility among all the active funds and also the indices concerned. And in terms of the return, the Franklin fund does remain on the top, but you can see that the SBI fund has been more or less performing similar to the Franklin fund, and then in the last couple of years has kind of stayed up, whereas the Franklin fund has fallen down. And that's that. So for people who are looking at SBI small cap versus Franklin's smaller companies, that could be a sore point. But in its own, on its own, the Franklin fund has clearly outperformed the benchmark. There's no issue there. Only when you compare peers is always a problem. There'll always be a better fund. There's no issue. Now we look at the 3-year period for the same set of graphs. But if you look at it over 3 years, there's not much difference between the SBI small cap and Franklin funds. But in terms of return, but in terms of risk, clearly smaller companies is the lowest in terms of risk. I have also done a comparison with another set of funds. So this is again over 5 years, and the Franklin fund is again in red. The small cap, SBI small cap is in pink. Kotak small cap is now in green. DSP small cap or the DSP micro cap is now in white. You can see that the DSP micro cap fund is performed similar to Franklin small cap up to this point and kind of in between the two funds here. So that's also quite okay, but of course it is close to lump sum investing now and so on. So the thing is that there will always be a better fund, but the point is that in this space, what is better or what is best in small cap space will keep changing more rapidly because of the volatility of the stocks. But I think as long as your small cap fund consistently outperforms its benchmark and gives you the kind of return that you like, it's okay. And anyway, you should be investing over the long term. So I think it's quite. I think the Franklin fund is as a reasonable performance. I would say it's nothing to complain too much about. So that's why the first thing I want to say is when you look at these rolling risk and rolling return graphs, or when you look at the peer comparison, you should not be too strict in peer comparison, because these things can go suddenly after 6 months. The Franklin fund can outperform the SBI small cap fund and so on. So you should not worry too much about that. Generally speaking, as long as it outperforms its benchmark, as I just said, it's fine. So in summary, I think existing investors can stay put comfortably in Franklin smaller companies. Of course, you should be investing for a very, very long term. If you ask the AMC, they will say at least 5 years. But at least 10 plus years, in my opinion. Very, very long term. Otherwise, it will not work. And you should also actively look at profit booking from small cap and mid cap funds. You can do it tactically, or you can do it in a goal-based way. Tactically, I have a video on this. For goal-based profit booking, you can look at my financial audit video. I have that as well. You can look at that. So, new investors who value performance, who like performance more than volatility, I think they will probably like small cap, SBI small cap. Probably they can get started with it. They'll get an understanding of risk and reward with SBI small cap. Not a problem. But in my opinion, as long as you don't mind the fund taking small cap fund taking mid cap exposure just to limit volatility, I think Franklin fund remains a reasonable choice. Of course, its AUM is much bigger than SBI small cap. That may be a problem, but as long as the AUM does not swell suddenly, I think it's okay. But I think now we're in a kind of a sideways market, and the inflow into the small cap funds would not have increased too much, I think. So during these circumstances, I think it still remains a reasonable choice even for a new investor. Existing investors can stay put. So that's all I have to say about that one. I have been asked to review Sundaram Midcap. I will look at that. There have also been other funds on the pipeline. Let me look at that. My choice of fund will depend on what will interest the most people, right? As a blogger, as a vlogger, if I can, a YouTuber, I should call it. My idea is to make videos or articles that will get the most new eyeballs to watch and so on. So that's a term that I use. So some of these funds I may not take on immediately, but I will. So just please be patient with me. But I have all these tools. If you look at the article in the link in the description box, I have a link to the tool that I use to create such comparisons. You can do it yourself. There's no, I mean, I look at these graphs and I don't make such great, interpretations, right? Anybody can interpret, so it's not a big deal. So I'll catch you in another video. Bye bye. Thanks for watching.